But today I'm super duper thrilled to be joined by Nadia Sood, who is the founder and group CEO at CreditEnable. What we're going to be doing is talking about everything that's happened in Nadia's journey to get to CreditEnable, and what's happening in SME funding, and all of the fintech trends that she sees coming up in the future. Thank you so much for joining us this morning, Nadia. How are you doing?
It's a pleasure to be here. Thank you for having me. I'm doing well, despite the odd world we're living in these days.
It is a bit of a weird one, isn't it? Where in the world are you, Nadia?
So I'm in London, but obviously we also have part of our business in India. So we've been seeing the impacts of the coronavirus on a pretty much global basis daily.
Well, and managing that impact across multiple geographies must be quite a difficult one to do as well, because as you say, different geos have been hit in very different ways, haven't they?
Yes, and different governments are responding differently. So the Indian lockdown started a bit later than the British lockdown, but it's been much more strict and it's continued now and it's being lifted only in certain pockets. So some of the luxuries we've had here, for example, being able to continue to shop on Amazon, haven't even been available to Indians. There's been a complete lockdown on e-commerce. So it's been very tricky just to get basic provisions in for people. And obviously SMEs have been critical to making that life actually work. So I think there's been a shift towards, oh, I didn't really appreciate that guy, to now, wow, unless he was there, I wouldn't be able to eat.
Yeah, it is amazing how, like you say, the world has changed, isn't it, over that period of time. I think, like you say, I think every little backstop that I've had has been Amazon, quite frankly, in the UK. So it's amazing to think what you would do without all of these different sort of safety nets in various different ways. But why don't you tell us a little bit about your background, and then we'll get into CreditEnable, because you've had a pretty amazing journey.
Yeah, thanks so much. So, I started my career actually as an investor and was investing large portfolios of investment, always in critical goods and services. And by that, I mean things that really are transformative to people's lives, like healthcare, agriculture, food, energy. And in these huge investment portfolios that I ran, we always interacted with a huge number of SMEs. So if we were building a hydropower project, there might be 20,000 SMEs in our supply chain. And what I consistently found, no matter where I was in the world, and that included the UK, the US, emerging economies, was that the banking system, the formal lending system, just had a really difficult time servicing the needs of SMEs quickly. And what that normally meant was that they were able to give them loans, but they had to give them loans in over such a long period of time, meaning it would take 6 to 8 weeks, that by the time the bank or the lender was able to issue, the SME had already gone off into the informal market to get the capital they needed just to keep running the business. So we stepped in a lot of the time and actually became a lender. And it struck me that there was a huge inefficiency that was occurring in this part of the credit market. And you could see huge innovation happening in the consumer set, in the corporate set, where people were getting loans on their mobile phones in Africa based on an Uber score. And it was like the SMEs were kind of just stuck there as the stepchild that wasn't getting attention. And if digitization could come into the mix, we would end up with a situation where the economy would be better off. SMEs would be better off. Lenders would be better off because it would become more cost effective for them to lend. And you would be moving a huge pile of capital, which every year is $8.1 trillion that's available, of which 4.5 trillion doesn't get dispersed into the global economy. And imagine the impact on jobs. So that was kind of the impetus for setting up CreditEnable. And it was a long journey to get there.
It's a market that has such a significant impact across the whole of the globe, right? This is GDP changing level of impact when it comes to the size of the prize when it comes to SMEs. So it's a really worthy service to provide, and a really impactful one to do as well. So how's CreditEnable sort of come about?
So really, we saw that there was an opportunity to interject with technology and act as a bridge between borrowers and lenders. And the fundamental problem for lenders, which is really important to take into consideration, is not that they don't want to lend. It's just that the process of actually underwriting you is quite complicated and time consuming. And because they don't really avail of a lot of digital tools, they're having to do most of the processes manually. And it becomes a very onerous process. Build a financial model on your own, ask the company to build a financial model, compare the two financial models. The whole thing, you can imagine, takes a lot of time. And it's hard for both parties, and especially hard for the SME, because they don't necessarily know how to build a model that a bank will understand. So we come in and we intermediate that whole thing, and we create a curated experience for both parties. So the SME actually enters into our universe, contacts us, says that they need help, and we kind of do all the work for them to figure out how much loan they can actually absorb and pay back within a reasonable amount, so that they don't become under stress by taking on debt. We do that all at no risk to their credit score. And then we find them exactly the right loan with exactly the right lender in the least amount of time. And terms are really important to SMEs. It's not just cash. If you're trying to expand and you're a fast growing company, you need a loan where the bank will forgive the majority of the principal payments in the first period, rather than just a standard pay the same amount, return principal every month. If you're a more established business, you might like that kind of loan. So figuring out even which loan to take is quite complicated, and we do all of that. So at the end of the day, the SME gets the best terms, the most amount, the highest, the fastest decision. And the bank gets to underwrite in a profitable, speedy way, improving their relationship with the SME as well. Because obviously when your bank delivers fast, you're happier with them.
Well, like you say, the good old days of banking, banks would have known some of this information, wouldn't they? That I think this is the issue, as you very rightly are sort of plugging that gap. Banks used to have probably a much closer relationship with their customers, so they had a greater understanding of what the types of businesses and how those things would really sort of play out. Now that sort of distance between banks and businesses, services like this fill a really, really interesting gap, because you're giving credibility to the business and confidence to the bank, aren't you? Which I think is a really interesting one, because I think particularly in the more VC orientated industries, then people would really start to think that the only way to fill this gap in the middle here would be a VC. But many traditional lenders, actually, if you've got as you say, if you've got your positioning together, and actually you've really got a plan that speaks bank so that they can really understand it, then actually you can really sort of plug that gap in much more traditional measures without really giving away equity. So that's super, super interesting. How long has CreditEnable been going now?
So we started off in 2017, but of course there was a lot of incubation before that. And we've been really fortunate to have been able to onboard a substantial number of lenders, like more than 20 lenders who are managing more than $70 billion of loan books. And we're intermediating on a daily basis. So we see thousands of SME loan applications every day. And when the party isn't creditworthy, actually we also help them. So we tell them before they've even applied to the bank, you should not be applying for a loan right now. You can't absorb it, or you should be looking for equity instead of debt. And we help them kind of take the journey of going further on the credit ladder so that they can actually get the loan later, if not today. And for the bank, that's obviously saving them going through huge numbers of applications that they won't actually be able to underwrite, and being able to provide the customer with a clear answer. And this is going to be so much more important now that time is even more of the essence. Businesses everywhere in the world are under strain. They need to know answers. They need to know what to do. The sense of security needs to be there, right? Everybody's living in such an unsecure world right now. And that's where technology and, artificial intelligence, machine learning can really help.
Yeah, I guess, as you say, SMEs are under probably more strains and stresses now than ever before, given everything that's happening with COVID. What have you sort of seen during this period? Has it changed the asks? Has it changed the amount of loans that you're sort of seeing?
Oh, well, definitely. So we've had like a 600% increase since COVID in the number of applications we're seeing. We've also seen a huge increase in the demand for debt. So in the first 15 days, for example, of the Indian lockdown, we saw $500 million demand for debt in 15 days time. And this is because SMEs were under strain. They didn't know when they were going to be able to start up. They needed to meet payroll. There hadn't yet been a stimulus package announced. But also we've seen a huge behavioral shift on both sides. The SME used to if they could rely on a branch manager or somebody within the bank to talk to, most of the banks have had to either furlough people or people are working from home, so they can't actually physically meet them anymore. If they relied on intermediaries, they can't meet the intermediaries any longer. So we've seen SMEs that probably never thought that they would go digital, going digital in large numbers. Banks as well, lenders are also struggling under the weight of their existing customer base, which is feeling the pressure, needing to talk, and even processing them or getting through them and then moving on to the new applications is very complicated and difficult. So they've also been reaching out more to say, can you bring us customers that are already pre-vetted so that we can advance faster?
Mm. Yeah, I think, like you say, that sort of seal and stamp of approval. I mean, a 600% increase in loan requests is pretty phenomenal. I know there's, like you say, there's obviously pretty testing times, but do you see, you talked there about the almost the sort of forced adoption with digital. I mean,
Yes.
what do you see being the impact of this on the other side? Because I mean, digital really is becoming now well, I've always sort of thought it should be the default, but increasingly it is the default for all of these things. Do you see that and many other trends kind of kicking off on whatever month we get to the other side of this one,
Absolutely. I think we're going to see a lot more move to digital from the smaller businesses who didn't really feel necessarily comfortable with it. I think what's going to be critical, of course, is the element of trust. And of course, why were people not going online before was largely not because they didn't necessarily understand how to go online. Interestingly, for example, we get lots of requests from people who are sole proprietorships who operate a lot online, but they don't operate their business online. They operate themselves online. So it's a trust issue in terms of who's getting my data? Are they protecting it? Is it going to be hacked? Is it going to compromise my livelihood? So the first thing is, as they move online, will lenders and other intermediaries be able to assure them that level of trust and confidence that they need to feel? And the second thing I think that's going to be a huge trend is the ones who are going to survive, because moving digital isn't just about going online, right? And you'll have seen this many times before. The ones who are going to survive, the businesses that will thrive, will be the ones that actually focus on the customer journey and making that easy and simple for people. And that's really the critical issue in this space, is that with, like you said, the lenders kind of losing their relationship manager human beings, are they able to move quickly enough to kind of fill that gap through a digital interaction? And the human touch and the empathy still needs to be there, because after all, small business owners, the stress is a very real stress every day. They gave up everything to set something up. Their whole family depends on them. Their community depends on them. It's a very different emotional connection than a big corporate player has to itself. So connecting with them empathetically through technology is going to be super important. And we spend most of our time thinking about that. How do we talk to people even online in an empathetic way, in a customized way, in a way that they'll understand, even if they're not sophisticated, and in a way that doesn't seem condescending if they are, because not all SMEs are the same either. They're all very, very vastly different in what they do and how they are.
And I think that's so critical. I mean, you're talking about humans just talking to each other like humans, which is often really it sounds obvious when you say it out loud, doesn't it? But it's one of those things that I think bizarrely billions of pounds spent by big organizations, big incumbent organizations in the banking space it hasn't addressed their operating costs, but it has removed that human interaction between them and the customer, which is pretty ironic given everything digital was really sort of set out to do. But I mean, you mentioned sort of machine learning and artificial intelligence. I know you've written a book or co-written a book about that subject matter. Do you want to tell us a little bit more about that? Because I think when you start getting into that sphere, people obviously lead to, well, it's just me talking to a computer. But actually, I think digital communications, as you say, has the potential to be bizarrely more human than some humans in the finance industry.
Yeah, or potentially better for you. So it's a tricky one, of course, because we've all heard stories of algorithms that have gone awry and have decided to exclude huge parts of the population from jobs and things like this. But if you're building models that are actually intuitively trying to understand how human beings are behaving, then you stand a chance of creating something really interesting. So, the one extreme is you go online and you get interacted with a bot and that you're told, I've even seen this myself, like, I'm a bot, so I can't help you, but I'll answer basic questions, which just makes you want to turn off, compared to another interaction where they might be saying, like you're used to on Google or Amazon, where you get recommendations that come up, or Netflix, which is really good at this, recommendations that come up that are specific to you, which you really engage with, right? And that's the kind of thing you want to try to engender through artificial intelligence. Most importantly, though, what it can do is actually remove bias from decision making. So human beings are biased, and we're limited by a certain set of data normally. So if we've had a bad interaction with a particular type of company, we automatically sort of assume that all other companies in that space are probably the same, when that's actually not true. So if you apply artificial intelligence really thoughtfully and use good unbiased data sets, you can start empowering more loans to and delivering more loans to women entrepreneurs, which is critical considering how many of them there are and how important they are. You can start empowering and lending to people in sectors where there's a prejudice towards the sector, but actually they're delivering really strong results, and their sector may or may not be critical to the economy. So using AI and machine learning in a smart, clever way, I think, which still requires human beings thinking about it and challenging it, right? Is there a bias in this? Should I retool this algorithm? Is it giving me the wrong results? I think we're still not at a place where we could just leave everything to machines and hope for the best.
Well, and I think that's the thing, isn't it? I mean, it's the saying, every algorithm has a mother, right? So, and I think whoever is programming and tuning these things has to ensure that we're putting in place things that actually are ethical. There's actually a question over on LinkedIn for you, actually, on this one. Is Dan Feeney says, how do we ensure that ethical AI is created for decisions? Because as you say, I mean, sadly, most risk is based on large scale retrospective data sets, which would so heavily bias towards, the point you made around female entrepreneurs or female founders. Then actually there has been 300, 400, 500 years of way more male founders than female founders. So statistically, betting on a male founder would make more sense if you were purely analyzing the data. Now, clearly that's not a sensible thing, and probably very in value a wrong conclusion to kind of jump to. But if you're just looking at that data set, you'd say a male founder would be 5 times or 10 times or whatever, because there's just been so many more of them. So like correcting those biases is so important, isn't it?
Yes, absolutely. So first of all and you're so right about this, David, and to answer the question, the first place you have to start is, what are the data sets you're actually using, and are they themselves biased? So are you taking gender into consideration at the beginning of that exercise or afterwards? So for example, in our data sets, we don't look at the gender of the company, we look at how well is it performing. And then later we might be able to say, oh, here's a cohort of women entrepreneurs that actually outperforms men, because we were never trying to remove the women or men factor. We never had that as a factor in the beginning. The second thing is looking for data sets outside of what you might be comfortable with and being open to the conclusions. And the last thing is actually interrogating yourself all the time and looking at exceptions. So when you decide, for example, to say no, when you look at it then afterwards in isolation and say, okay, here's 50 companies we said we shouldn't lend to. Well, does that make sense if we look at them independently from this algorithm? And if not, how do we correct? What's the problem in how our algorithm's looking at things? And getting different perspectives. So I always believed, and I still believe, that it sort of takes a village to raise a company. So my advisory board, my team are coming from hugely diverse backgrounds, both technically, professionally, and geographically. And because of that, they argue with each other a lot about the biases, and that's really healthy. We get around most of them because of that.
I have a very similar team. It's all very constructive, but there's definitely, like I say, I think if you've got lots of smart people together who can have those conversations and keep moving the agenda forward, then it's the best way of doing it. What was the book called then? So if anybody's interested in going picking it up.
It's called The AI Book. It's published by Wiley, and it's all about how AI is transforming financial services. And it's really meant for people who aren't, technical AI people. So it's kind of written in a chatty format, so you can understand it, and it's not too dense.
It really feels on that subject matter. It feels like we're on the cusp of real mainstream adoption. Like I say, I mean, artificial intelligence is such a broad range of subject matter, isn't it? In terms of all of the different strains and sort of pieces of it, from really sort of narrow AI to, like you say, really vast machine learning. But it does feel like in day-to-day life now, people are getting more understanding about how algorithms are affecting, whether it's just, like say, Instagram ads, or whether it's affecting lending decisions. It's sort of permeating every piece of life, isn't it?
Mm-hmm.
Back onto CreditEnable a little bit. There's some really interesting questions over on LinkedIn on this one. Could we hear a little bit more about how CreditEnable reaches customers? How are you, I think, particularly in this period, how are you finding accessing customers at this time? Is it mainly online, or is there other approaches that you're taking?
So we use a mixed approach. We go directly to SMEs and let them know on a digital basis that we're there to help them. We also speak a lot in the press and at different conferences that SMEs tend to participate in, so that they know that we're there. And now we're speaking at those things virtually, obviously. But we also go through vast networks. And like I said before, it takes a village to build a company. I believe very firmly in partnerships. In India, we have a partnership with the largest trade association in the world, actually, which represents 70 million small businesses. They have huge informal networks that mainly function digitally, on WhatsApp, Facebook, things like that. And we go via those networks to reach SMEs. So through partnerships, then also through aggregators of SMEs, so large corporate players, online e-commerce platforms where lots of SMEs congregate, so that they know that we're there too. And again, we try to partner, so it's always a partnership model, so that they get the best for their customers, and we help their customers the most that we can.
No, I think it's a really smart model. We've talked about it a few times on this show about, if you can have innovation and distribution in the way in which sort of Clayton Christensen is described in the past, then actually you get the best of both worlds, don't you? Yeah. Actually, you guys were announced recently. I think you were one of 200 revolutionists in FinTech, which I think is a really good way of describing what you're doing, because it's bringing about a very significant step change from the incumbent's perspective. I mean, that's a pretty great accolade to have.
Yeah, we were very delighted to be named in that list. And I mean, I think it's absolutely true. And the way I think about the way we're revolutionizing things is by bringing technology and empathy together. Technology can be really cold, it can be really transactional, and it doesn't need to be. It can also be warm and empathetic. And at the end of the day, we're trying to help people. So, whatever we do is always built around that principle. Will it make your life easier? Will it be simpler for you? And will it make the lender's life easier? And will it be simpler for them? And ideally, both of you are going to have a better transaction experience, a better relationship experience, and at the end of the day, a better economic gain. And so it's win-win for everybody. But that's, I think, only possible because of the idea that technology and empathy have to go together.
Completely agree with that. Like I say, AI isn't about having less human interaction. Definitely, maybe less humans, but not less human interaction. So, I mean, it's a tough time for SMEs globally, as you say. But do you think they have a sort of a bright future? Do you think there is some silver linings that are sort of coming out through everything that's happening at this stage?
I think absolutely. I mean, I can't even tell you how amazing the entrepreneurial spirit is that we've seen. Like, we've seen people shifting from being a greengrocer to a mask distributor in overnight. We've seen people just seizing the opportunity and going for something. We've seen a huge number of people actually contacting us saying they want to start a new business in the middle of COVID because they see an opportunity to help in their community, which just tells you how fantastic SME entrepreneurs are. And I think the rather like rapid sort of submersion into digital, which is complicated and complex and hard, they've embraced it really wholeheartedly. And I think because they're nimble and small, they're going to be able to make things happen that bigger companies won't be able to. So, I was on a big podcast the other day, a group discussion about, should should big companies be worried? And the presenter from Chicago booth was like, they should be, because SMEs are nimble and they're going to be biting at their ankles and they're going to make things happen. And I think it's absolutely true.
Yeah, I mean, entrepreneurs find a way, don't they? It's definitely they'll never sit down and just be completely defeated. So, I mean, it's going to be fascinating to see what happens. It's great to see players like yourself really, like say, bringing about a bit more sort of humanity in this process and really sort of helping people. But thank you so much for joining us. I'm afraid it's top of the hour, so we probably better let everybody get on with their day now. But Nadia, where can people find out a little bit more about you and your company?
Yeah, absolutely. So you can reach us in the UK on www.CreditEnable.com and in India at www.CreditEnable.in. You can find me on LinkedIn at Nadia Sood and the company also on LinkedIn.